So, the DTCC is in the process of putting their assets on top of Canton. They'll probably make them available to other chains, but Canton is the first one. They hold $100 trillion of assets. Now, imagine that this is just moderately successful and you get $10 trillion of assets on Canton.
All right, real fast, rolling over to Canton's price action real quick. So we've been given accurate analysis and updates on both Canton and XRP. Starting with Canton, all right? So I know that unlike other trading pairs, especially in futures, the deltas in the dark pools are a lot more condensed. I've noticed that on crypto, they're a lot more spread out. So we have had to be very patient as of recent, especially with Canton's price action and the overall PA that we've seen over the last month. So I'll start back here with this price action where we had this wick on MEXC, because this is MEXC's data, where we had this wick that did not register on other exchanges that dropped the price down into the 14,801. And so for the first time, we saw buyers passively defend this dark pool level. And from this defense, we can see that there was some consolidation, a battle between buyers and sellers, and then buyers tried to become aggressive and gain the upper hand here and push price higher, taking all the seller stop losses that exist in this area at roughly around 17.5 cents. But they failed. And sellers, which we can clearly see, became aggressive enough here to break previous supports, defended their positions, and they won that battle. And instead of price making higher highs and higher lows on Canton, we then saw buyers fail to become aggressive enough to break passive sell volume, which we can see they defended their previous highs, which led to a break in market structure or bearish order flow. And then they continued to become aggressive, trap buyers, making lower lows, lower highs, lower lows, lower highs, and push price back down into the dark pool, where again, buyers made an attempt, like they did here, to defend the 14,801. And they did, temporarily. We can see that right here. So again, I have an arrow pointed and it says buyers passively defended. So the buyers that defended here, defended the base here, and we can see that bullish reaction. However, in this note, it says buyers failed to become aggressive enough to break passive sell volume. And so that same thing happened here. Buyers did not have enough aggression and volume thrown up to defeat the sellers that previously became aggressive enough, just like before, to break supports. Okay. And they got trapped, and price continued with the overall bearish momentum. Then for the third time and fourth time and fifth time, we can see this battle in this area. That creates the third, fourth, and fifth test of the 14,801. Buyers passively defended it. They tried to make an attempt to absorb the sell volume. They started to make a buy delta held, where we can see that here. Here's a high, breaking a previous resistance. Here's the base retested, and a new high is created. I got kind of optimistic when this was taking place because this is a buy delta held pattern. However, buyers did not have enough volume to continue with this push. And so the next highlight here I have, it says passive sellers trapped buyers and became aggressive enough where sellers then broke the dark pool. So we can see that passive seller here, which if we look to the left-hand side was the same passive seller that defended against this aggressive buyer and pushed price action back to the downside. The only difference between these two moves is that for the first time, the sellers in this area became aggressive enough here to break through the dark pool and take out the higher lows that were previously created at the dark pool. And from that momentum shift, we're now for the first time, this passive seller turned aggressive enough to break through all the passive buyers that have existed previously at the 14,801. And it is now started to act as a resistance, where now we're seeing passive sellers defend this dark pool, where every single time, look at the effort by buyers, here's effort by buyers, and it just results in a break in structure to the downside, signaling that sellers are still passively defending this area. Same thing here, buyers make an attempt to push above the dark pool and engulf the sellers. They fail, they get trapped, sellers are throwing up a defense and becoming aggressive and making new lows. Two more attempts by buyers. We can see that here. Buyers made an attempt to push price higher. They failed. They got trapped right spot on at the 14,801. You cannot make this accuracy up. And yet again, sellers prevailed and broke into new structural lows. However, recently, over the last 48 hours, we have created a new A to B move, where buyers made yet another attempt to break the 14,801, but have since got trapped, and sellers are clearly yet again defending. So now, after aggressively breaking the dark pool, and after having passive defense thrown up by buyers here, you can now see that sellers, inversely, are passively defending this dark pool. If this price action here started to exist in this area, where all of these passive sellers, we can assume, have stop losses that exist above these highs, and that is broken, we turn the 14,801 into a support, and we see the buy volume turn into a sell squeeze, taking out the seller stop losses that exist in this area and in this area. And we start to make our way up towards the 8,194 or 18,194. But we have to see buyers regain control, and we need to see them turn it into support, and we need to start seeing them make higher highs and higher lows above it. And until that takes place, I'm going to continue to expect some form of move down into lower level dark pools. All right. Okay. Now, higher time frame, grander scheme of things, that's not something to be worried about, because on the higher time frame, mind you, this is the 8-hour chart, we're still operating in this last higher low, higher high leg. So as long as we're above roughly around 10 cents, we're still operating in this base on Canton. And if we were to take a fib from the low to the high, you can actually see that the 12,275 comes right in at around 79% discount. So it would be reasonable for us to see a drop down into this level to then see buyers reaccumulate orders. We might see some consolidation around this area for quite some time before we finally see buyers regain control and make an attempt to push price back to the upside. Okay. But I hope that in detail breaks down for you guys with real sound, no freaking retail bullcrap. I don't even know what the heck these dudes on the internet be talking about, but until passive buyers absorb sellers that are currently in control, aggressively push price back above the dark pool and turn it into support, I'm going to continue to assume that sellers have the upper hand and they're likely to push price lower. All right. If they do end up pushing price higher, buyers that is, to the upside, before we get excited, we still need to see price engulf the 18,194 and the 19,214. Above that, if that does prevail, we do have 22, 26, and 29 cents on our radar to the upside. XRP, we have delivered the most accurate analysis literally on the face of the retail internet for anybody that covers XRP. You guys can see I always like to do this. I like to, link my posts to TradingView charts so that way people that actually track this stuff can see that we're not here just like guessing, and we actually have access to institutional data and software. So if you come over here to this post on X, you can see this is from March 17th. March 17th, I highlighted $1.49, $1.43, and $1.34 as a pullback area, given that we had core PPI, FOMC, unemployment claims, Philly Fed manufacturing, Iran tensions, yen intervention fears, tariff arrangements, and a busy week ahead, right? All the things that we highlighted at the beginning of today's call. And sure enough, if we go over and we look at XRP's price action from the top, where I called that out, we can see $1.43 was met and $1.34 was met. This one as well, to be more specific, given an update, you can see I had the 1.43802 sell wall on my charts where it was acting as a resistance. We can see just like on Canton, it had previously acted here in this area as a defense by passive buyers. However, sellers were able to engulf those buyers, become aggressive, and make a new leg to the downside. Buyers made an attempt to push price back above the 1.43802. And from this screenshot on March 23rd, 2026, I had highlighted $1.36 as the next area of interest where price could come back down into if $1.43 was not broken. And now looking at, again, that timestamp, I called that out at the high at the 1.43802. And price came straight down back into $1.36 and consolidated around that for a little bit before now today flipping back below $1.34. All right. So level to level, what are the updates that I'm looking at on XRP? Right now, we have recently broken on the daily. If you head into the Golden Dawn section, I've screenshotted a little order flow analysis. You guys can see on the daily here, we have recently seen sellers become aggressive looking at the yellow sell volume bubble that just recently broke $1.34. The next area to the downside is going to be $1.27 if sellers can prevail below $1.34 and continue with the momentum. If buyers do not defend at $1.27, that opens up the door for the buy wall at $1.11. So those are the next two areas of interest that I'm personally paying attention to on XRP to the downside if sellers continue with this momentum. Now, if buyers can turn price around and defend these current lows, we can see sellers start to get trapped and we can see buyers become aggressive and push price sustainably back above $1.34. That would open the door for a revisitation of 143. Not getting too excited until we turn this previous trapped buyer at $1.43 into a support. And we see buyers become aggressive. If that happens, same thing. I'm not getting too excited for any higher prices on XRP until we turn $1.62 into support, breaking above this previous trapped buyer, where we can clear as day see this massive bearish candlestick. We can assume there was an aggressive seller here. Now we can see that it properly passively defended this area, pushing price back to the downside. We would need to see $1.62 broken before we get excited about any formal recovery on XRP. So with that in mind, we can see clear as day right now the sentiment is skewed to the downside and would likely favor lower targets until $1.34, $1.36, and $1.43 are broken to the upside. So 127 to 111 is next on our radar. If 111 in a super bearish case scenario did break, mind you, we still have some lower level dark pools on our radar. Let me pull those up real quick for you guys. I don't have them on my charts. But there are some pretty nasty levels to the downside. I know that. So the next dark pool below $1 is 91 cents. And the bottom of that delta comes in at 88 cents. So just be mindful of that. But you guys have those updates in the chat. Okay. All right, cool. Well, this is the last couple of video clips that I'll play. So, we know that Canton had some major freaking announcements this week. Like, honestly, huge announcements, in my opinion. They partnered with Layer Zero this week. We had a huge announcement that Visa is becoming a super validator. And I think that goes hand in hand with what Eric said on a podcast from Ledger just a couple of weeks ago, where I just want you guys to hear what he says, because this just confirms what he said is true. Listen to what he's got to say.
First one is many orders of magnitude bigger than the second.
Okay.
So it's not like, where is Canton setting up? We're setting up to be on the real world side of stuff, because it's also an enabler for the second one.
Mm-hmm.
If you have perfect, 24/7 creation and redemption across these things, helps you produce a higher quality permissionless wrapped asset. But it all starts with solving the liquidity problems on the real world side.
Mm-hmm.
So having the real assets, having the real lending markets that are deep, that have all the really large passive liquidity,
Mm-hmm.
getting all of that set up, it helps build better permissionless products.
Mm-hmm.
So it's both, but our focus primarily and overwhelmingly by effort and go to market is on the real world side of stuff.
And that's and how fast is that going?
It's like the 10-year overnight success sort of thing. Right now, things are going incredibly fast.
Right.
There are some names that will come to market in the next 6 months that will blow people's minds. And the scale at which they come to market will completely catch people off guard. But that, some of these names have been on our cap table for a decade.
Yeah.
And, you know, we've been working through all sorts of problems with them for a very long time. So the moons have definitely aligned.
Yeah.
I love that, bro.
Yeah. You know, the moons have definitely aligned.
Yeah, that gave me goosebumps right there.
And then, you know, fast forward to this week. And this week alone, we saw an announcement from Visa where at a TradFi summit, Visa got on stage and said, hey, look, we're partnering with Canton. You know, I don't know if you guys saw that video clip, but that was pretty nuts to see that Visa got on stage and their whole entire presentation at the Digital Asset Summit was them saying that they're partnering with Canton. So that was pretty crazy. And then we had this one, you know, March 26, 2026, we had Layer Zero announced that they're partnering with Canton to bring institutional assets to global crypto markets, which was pretty big. But more for us in the DeFi Wealth 28 Club, we got this stuff going on, you know. So Haven Digital Partners announced on their LinkedIn profile, Haven Digital Partners is launching the first permission peer-to-peer lending platform natively on the Canton network, purpose-built for regulated and compliant on-chain finance, where it's got regulated licensed investment managers, on-chain smart contracts paired with off-chain enforceable legal agreements, qualified custodians, third-party qualified custody by BitGo, which is a huge institutional custody provider, compliant independent KYC, KYB, and AML wallet party ID screening for all participants, transparent full counterparty transparency. Like, this is the stuff you want to be hearing when you see about them talking about, you know, they're compliant with regulation. Then it talks about how they're tailored to complete flexibility on rates, durations, collateral, and repayment direction negotiations between parties with the Haven platform. And users are going to be able to lend Canton Coin, USDCX, or CBTC, which is the BTC version on Canton, and generate yield. They're going to be able to borrow against our holdings with flexible collateral options, on-chain auto margin efficient collateral management. Like, this just screams Wealth 28. So when this platform fully comes live and, you know, we're able to mess around with it, you know, I'll definitely continue to keep you guys updated. Here's the platform right here. You know, you can go and you can click on some things here. I'll save time in today's video break, then I won't do that. But this is going to be something interesting to keep an eye on. Coming over here to what Yuval said from this, I don't know what panel this was. It was an event that he was just recently at. I know he's in Shanghai right now somewhere, but I don't know if that's where this is from. However, this was uploaded just a day ago, still only has 289 views. And considering everything that we've showed you all in today's video breakdown, listen to what Yuval says about the amount of money that's still set to come on chain and how early we still are in this space, considering the sizable and addressable market that could come into blockchain, specifically like Canton. Take a second and listen.
And that's why it's taken so long to bring Canton to production. So, you know, we talk about the opportunity in blockchain, and I just want to put some, you know, we talk about, you know, asset mobility. Charlie brought a lot of the opportunity, asset mobility, composability. I totally agree. $42 trillion worth of assets in the world are effectively sitting idle. They're not being used. And the reality is not because people do not want to use them. It's because in order to use them, you have to mobilize them all over the world. So just for those that don't know what, like, Basel III after the financial crisis tells banks you have to hold certain things on your balance sheet based on your portfolio size. Now, if you are JP Morgan, you have legal entities all over the world, and you need to satisfy these requirements per every legal entity, meaning if you have money in the US, it does not satisfy your requirements in the UK and vice versa. And therefore, because you don't know what is going to happen tomorrow or in a few days, you do what you put liquidity buffers. You overcapitalize all of your legal entities. And not because you want to, because you have to. You have to meet your obligations. And that's also true for corporations. If you have, you know, payments to your employees, to your vendors, or you're supposed to receive, you have to have cash available in all kinds of jurisdictions, even though you could have potentially used it somewhere else. But because it takes time to move money or collateral, you effectively hold it idle. The fact that you can't move cash into yield-bearing assets in real time means you're sitting on idle cash as well. So our view is that the opportunity is ginormous, and to be honest, crypto haven't even scratched of the surface. Like we're nowhere close. And we'll talk about the Broadridge repo in a second. So this is from RWA, to be clear, the amount of treasuries that have been had to tokenize to reach this number is even higher. 430 billion is really the volume that actually gets traded every day, give or take. And even that is nothing. So just to put it in perspective, the repo market globally is about $10.5 trillion notional every single day. So I'm very proud because Broadridge is almost 10% of the US repo market, but there's still a lot to do. And the only point here is not actually to gloat about Canton, but it's really to open the eyes that we're so far away from actually achieving the value of this technology. We're not even close from a scale to get to the point of really getting some serious returns.
So I wanted you guys to hear that one, how just far away we are from true scaled institutional adoption of the space in terms of the numbers that you've all just threw. Broadridge alone, $10 trillion in repo, freaking $42 trillion in assets, still just sitting idle, doing nothing. And all of that is about the change where we're standing at now. That's the crazy part. We're standing at a $2.3 trillion market with the brink of regulation and clarity coming to fruition for the first time in crypto's history. You don't want to be a market participant after these numbers start to come on chain. Not financial advice.
Bro, those numbers were mind-blowing right now. And that talk track is the most damn. That just made me extremely bullish even more, bro.
Well, considering the fact that you've all specifically mentioned $10 trillion, coming over here, we know Don Wilson and his company DRW, they're a validator, if not a super validator, if I'm not mistaken, on Canton. And, they have millions of dollars invested into Canton. And listen to what he says. Again, at this, mind you, setting the precedence for this. This is Don Wilson sitting at the Digital Asset Summit, the same Digital Asset Summit where Visa, think about it. They prepared, this Digital Asset Summit was announced months ago. Visa was announced coming to this Digital Asset Summit months ago, which means that months ago, whoever is involved in preparing Visa's, presentation for this summit knew that they were going to present that they were partnering with Canton at this summit months in advance, which just goes to show what Eric is saying, that over the coming months ahead, we're going to see announcements that are going to blow people's minds. And he said that months ago. Now, fast forward to this week, we see that. And then Don Wilson at the same Digital Asset Summit talks about $10 trillion flowing through Canton Network. Listen to what he says here.
Yeah, we didn't put it into the programming, and I don't know why people aren't talking about it, but I feel like backstage, a lot of people are talking about it, which is what happens to as all these RWAs come on chain, the value on a chain dramatically increases. But what happens to a chain? I think there's starting to be a lot of concern of what happens to a chain when the value of assets on a chain is way higher than the value of a chain itself. And that starts to, you can kind of squint and start to see how that could skew some of the security incentives. I don't know if you guys have thought about this or.
Yeah, no, this is something that we've started to talk about and highlight. And again, as we thought about, okay, what are the characteristics of a chain to support traditional financial instruments? And so, privacy was one of the things. Lack of front-running ability is another. So, MEV, that ability for people to reorder transactions to extract value, which is something that happens on top of Ethereum and Solana. Again, that's just not suitable for financial markets. And this topic is another topic of chain security. So, the DTCC is in the process of putting their assets on top of Canton. They'll probably make them available to other chains, but Canton is the first one. They hold $100 trillion of assets. Now, imagine that this is just moderately successful and you get $10 trillion of assets on Canton. Well, the good thing is that the security protocol on Canton is not a proof of stake framework. It's the consensus mechanism. And by the way, because of the privacy, it's not like you could even go after a wallet and say, oh, here's a wallet that's got a bunch of assets in it. Let's try to re-engineer something here to reorder where these assets are held. But if that same $10 trillion went on top of Ethereum or Solana, you now have this, Ethereum's a $250 billion chain. So you now have 40 times the value on the chain. Solana even worse, right? It's a, I don't know, $50 or $60 billion chain. So the multiple of RWAs that you have on the chain relative to the chain value creates this incentive to, can we, gain control of these, of this chain and reorder things? I don't know. It becomes more and more attractive as the ratio of RWA to chain value increases.
Yeah.
So what I want you guys to really pay attention to is he said, let's pretend that the DTCC tokenizing $100 trillion of their assets just becomes, he said the words moderately successful. So that's
that's 100%.
That's like kind of successful. That's not like extremely successful. That's moderately successful. And $10 trillion comes on the Canton.
That's more than the whole market cap of crypto. What's the market cap today, bro, of crypto?
2.3.
Bro, that would quickly take us from 2.3 to 12.3. And then 10 of it would be on Canton.
And he also specifically said at this Digital Asset Summit, mind you, the same Digital Asset Summit where, again, I stress the importance of Visa having pre-planned this announcement months in advance. Here it is right here, Visa. This is like a huge picture right there. Visa Canton. Crazy announcement.
And as we're doing that, the consistent thing that we keep running into over and over again, both internally and with clients, is privacy. For us, privacy is one of the single most important things that has become a barrier to moving meaningful payments activity on chain. Now, don't get me wrong, public blockchains have been fantastic. They've been an enormously germane proving ground to make programmable money, 24/7 settlement, and global access. But then they also expose transaction data by design. Flows, counterparties, positions are sometimes visible in real time. And if you're a bank or a trading platform or a payments company, this can serve a lot of challenges. It's a lot harder to run payroll if potentially the salaries could be made public. It's a lot harder to move collateral or trade if every position could potentially be visible. And the transparency that has helped us build early trust through public blockchains is now starting to become incompatible with the privacy expectations that regulated finance really requires. So the question that we ask ourselves is, how do we keep this innovation going while still providing institutions the privacy, the control, and the governance that they require? For us, this is where the Canton Network comes in. We spend a lot of time with partners in this ecosystem. And the one thing we love about the Canton Network is it has a configurable privacy model that was built for regulated finance from the ground up. What we like is that it combines composability and shared infrastructure we value from public networks with privacy, selective data sharing, and strong governance. This is one of the reasons why some of the largest capital market institutions are already using Canton to power tokenized securities, collateral, and other world assets. If I was just to do a TLDR on this, what we do like about Canton is that it was designed with regulators, risk officers, and market infrastructure in mind, and not just developers. So for us, this means we're taking a new step. Visa will be joining the Canton network as a first payments company to serve as a super validator. Our goal is consistently to promote and bring to bear the privacy-preserving infrastructure that would help power stablecoin use cases like settlement, stablecoin linked cards, and B2B cross-border payments. And as a super validator, we bring a little bit of experience to bear. We want to help run Canton and over time other organizations that can be with a similar set of credibility in how we operate critical payment infrastructure around the world, which means we want to help shape trust, governance, and reliability for the next generation of financial infrastructure.
The same stage that they announced this, Don Wilson says this, I don't think it's by accident. I think that it's all strategically, planned. And I think personally that Canton, along with many other layer ones, is going to be one of the ones that survives long term. So just pay attention to detail. None of these things are by accident. Not financial advice. There's always risk involved with investing in these digital assets, and who knows where the market's really going to go in the future. But I'm definitely allocated personally to Canton. I have Canton exposure in my portfolio, and I'm going to continue to dollar cost average into Canton as an asset in my portfolio for the long-term hold. So that's it really that I have to share with you guys today. I had a couple people in the chat ask about the research. Don't forget, all this research is readily available inside the private CYPRX Discord. All this stuff, like some of these videos that we have in the Discord, some of the documents that we have in the Discord, are all the things that people should be watching and paying attention to. We have here's an announcement from Sandy Call, Franklin Templeton, probably has no views, like all the stuff that everybody should be mindful of during these types of market environments. It's all inside. Come tap in with us. Saw a couple of you guys talk about joining the Wealth 28 Club. We'd love to have you on the team. Come get a thorough understanding of the DeFi ecosystem, wrapping your head around what's possible in the future, how to really do your due diligence on these protocols, and, not just get scammed out there and deploy your hard-earned assets on a freaking protocol that's just going to get rug pulled. We talk about all that in the Wealth 28 Club. We conversate on these things inside the private CYPRX Discord all throughout the week. Lock in with us, guys and gals. We'd love to have you on the team. That's really all that I have for you guys today. Enjoy your weekend. Kev, Aqua, if you guys have anything for the people, many blessings. You guys are looking at two of the best mentors in the space, two profitable traders on top of two individuals that invest in DeFi and actually have, the rap sheet in the portfolio to show a rising equity curve. It's crazy that people would rather follow individuals on the internet that make up theories and speculate on shit instead of follow 7 to 6 figure mentors, 4 of them, who operate in a community successfully, helping rise people up and show people how to really actually prevail in these markets. So, Kev, Aqua, floor is yours. That's all I have for the people today. Yeah, blessings to you guys.